There is a moment in every person's financial life when something stops making sense. You work harder, you earn more, but somehow you don't get ahead. Your paycheck grows, yet your bank account doesn't. Your promotions come, but freedom never does. And it's not because you're bad with money. It's because there is a second financial system operating quietly in the background. One you were never taught, never shown, and never invited to use. A system so powerful that it allows certain families to grow wealth for generations while paying little to no tax along the way. And today you're going to see it. Once you understand this, you can't unsee it. 2 games, 2 rule books, 1 massive lie. Here's the truth nobody tells you early enough. The tax system was never designed for workers. It was designed for owners. If you earn money from a job, salary, wages, bonuses, you play one game. If you earn money from assets, businesses, real estate, stocks, you play a completely different one. Workers earn, then get taxed, then try to survive on what's left. Owners acquire assets, then let them grow, then and legally delay or eliminate taxes. Same country, same IRS, totally different outcomes. And the moment you cross from worker to owner, even with just one asset, everything changes. The fatal mistake most people make. Let's start with a simple example. You buy a house for $400,000, right? You rent it out. Tenants pay the mortgage, years pass. Now that same house is worth $500,000. Most people see this and think, I won, time to sell. They sell, they feel proud, they cash out, and then the tax bill arrives. That $100,000 gain, it's taxable, 15%, 20%, sometimes more. Suddenly your win shrinks fast, and worse, you've lost the asset, your wealth didn't compound, it reset. That's the trap. Every time you sell, you restart the game from zero. What the wealthy do instead. Wealthy people don't sell assets that are working. They borrow against them. Here's the key rule that changes everything. Borrowed money is not income. And because it's not income, it's not taxed. Let that sink in. You can receive large amounts of cash legally without triggering taxes. Not because you cheated, but because you understood the rules, how borrowing beats selling. Let's go back to that house. You bought it for $400,000. You put 20% down. The bank loaned you the rest. Over time, tenants pay the mortgage. The loan balance drops, the property appreciates. Now the house is worth $500,000. Most lenders allow you to borrow up to 75% of its value. That means you can refinance and pull out roughly $95,000. That money lands in your bank account. No capital gains tax, no income tax, no IRS letter. It's debt, not income. And the house? You still own it. It still cash flows. It still appreciates. It still depreciates on paper. Nothing stopped. Why debt is not the enemy. Poor people fear debt. Wealthy people fear taxable events. Debt is only dangerous when it doesn't produce income. But when the asset pays for the debt, debt becomes leverage. It becomes a bridge that lets your wealth keep growing while your taxes stay low. The compounding loop that never resets. Here's the cycle wealthy families repeat. They buy assets. Those assets generate cash flow. Cash flow builds equity. Equity unlocks borrowing. Borrowed money buys more assets. Repeat. No selling, no resetting, no big tax hits, just quiet compounding. This is the owner's mindset. Why billionaires take tiny salaries. This is why people like Elon Musk and Mark Zuckerberg famously pay themselves almost nothing. They don't need income, and they own massive assets, company stock. Instead of selling and paying billions in taxes, they borrow against that stock. And they fund their lives with loans, tax-free, same strategy, bigger scale, the until you die part. Everyone misses it. Here's where it gets wild. When someone dies, their assets receive something called a step up in basis. Translation? All the appreciation that happened during their lifetime gets erased for tax purposes. The heirs inherit the assets as if they were bought at today's price. If they sell immediately, they owe zero capital gains tax on decades of growth. The loop never closes. The snowball keeps rolling, generation after generation. And no, it's not illegal. This strategy isn't hidden because it's illegal. It's hidden because it's normal for the wealthy. It's built into the tax code. Perfectly legal, perfectly ethical, perfectly inaccessible. Unless you know how it works. Why workers feel trapped. Most people live on a treadmill, earned a tax to spend to repeat. For many Americans, 3 to 4 months of every year is spent working just to pay taxes. That's time you never get back. Money that never compounds. And the tragedy is this. The difference between the wealthy and everyone else isn't intelligence, it isn't effort. It's access to strategy, the only real entry point for normal people. For decades, this system felt unreachable. Stocks required massive capital. Businesses required time and risk. But one asset class quietly opened the door. Real estate. Why? Because real estate gives you cash flow or appreciation, leverage, depreciation, and unique tax treatment, all in one place. And now there's a twist that made it even more powerful. The tax code twist that changed everything. A controversial piece of legislation quietly revived a powerful rule: bonus depreciation. This allows owners to take decades of depreciation and claim it immediately, especially powerful with short-term rentals. If you actively manage a short-term rental, treating it like a business, the IRS treats your losses differently. Those paper losses can offset W-2 income. Yes, your job income. The W-2 worker breakthrough example. Let's say you earn $100,000 a year. Your tax bill, roughly $18,000 to $22,000. Now you buy a $500,000 short-term rental. You actively manage it. Through cost segregation and bonus depreciation, you generate roughly $125,000 in paper losses. On paper, your taxable income drops to zero. Your tax bill, gone. Not eliminated forever, deferred. The government just gave you an interest-free loan. What smart owners do with that money? Instead of sending $20,000 to the IRS, you keep it, you deploy it, down payment, renovation, another asset. And that second asset produces more depreciation, more cash flow, more equity. Now the snowball starts rolling. The zero tax snowball formula. Here's the formula wealthy owners live by. Cash flow builds equity. Equity unlocks borrowing. Borrowed capital buys assets. Assets create deductions. Deductions reduce taxes. Lower taxes, free capital. Free capital buys more assets. And the cycle accelerates. Why this changes everything. This isn't about cheating taxes. It's about understanding the system. You were never taught this in school. You were never shown this at work. But now you see it. And once you do, you can't unsee it. The wealthy aren't smarter. They're just playing a different game. And now you know the rules. If this opened your eyes, stay curious. If it challenged what you believed, dig deeper. And if you want to keep learning how ownership changes everything, make sure you don't miss what comes next. Because this is how wealth quietly survives taxes, time, and generations. If this video helped you see money differently, if it revealed a system you were never taught in school, then do one thing for yourself right now. Like this video, it tells the algorithm this kind of knowledge matters. Subscribe to the channel, because this is where we break down the rules the wealthy actually play by, without the fluff, without the hype, and turn on notifications so you don't miss the next video, where we go even deeper into how ownership changes everything. This information changes lives, but only if you see it. I'll see you in the next one.